Hey everyone, welcome back. No matter where you are in this huge world, I hope you're all having a great day. What we're about to talk about could be the most important thing for people who own XRP in years. Now, the countdown has really started. The first XRP spot ETF will start trading this Thursday, not next month or next quarter. And what's about to happen could have a huge impact on the whole crypto world. Here's the crazy part. Not a single big exchange has more than 5.1 billion XRP left. That's it. It is very rare for an asset that is about to be made available to institutional buyers through ETFs to have such a small supply. JP Morgan thinks that up to $8 billion could come into XRP in the first year of trading as an ETF. Think about that. A lot of money is being put into an asset that only has a few billion pieces left in circulation. That's how supply shocks start. That's why brave people like Jake Clavers have said that XRP could hit $100 by the end of 2025 if these ETFs come out at the same time. At first look, that sounds like a lot of work. It's not impossible though once you do the math. You can quickly see that there isn't enough XRP to meet demand if you look at the current supply and imagine even a small amount of those institutional inputs. That makes prices go up quickly. They rise very high. Before we get into more detail about how XRP could hit those levels and what's really going on with Ripple, Flare, and the banks, I have something to share with those of you who want to go beyond the news and really become part of the top 1%. This week marks the beginning of the XRP ETF age. The first fund is set to open for business on Thursday, and more are expected to follow in the coming weeks. It's important to note that these are spot ETFs and not futures-based products. In other words, they need to hold the real XRP token that backs up each share they give out. Just one ETF share is the same as real XRP being taken off the market and stored. That's not fake demand, that's direct demand. The Bitcoin and Ethereum ETFs caused a lot of energy, but the XRP setup is even more exciting because there is only so much float. That's because most people don't know how little XRP is really out there when you take out what Ripple, the escrows, and long-term users hold. There isn't much money in the free-floating cash pool that ETFs can use. It gets even more interesting now. Grok confirmed that there are now only 5.1 billion XRP left on all big exchanges. This means that ETFs will have to compete with the open market to get their allocations. Also, small buyers will begin to buy XRP once they notice that its price is rising faster. We all know what will happen. People who buy things in stores always wait until the breakout starts. As soon as XRP starts to rise, they rush in and pay whatever the market asks for. Before that, they don't want to tie up their money. In early 2021, Bitcoin went from $10,000 to $60,000 in just a few months, following the same trend. When institutional demand meets retail fear of missing out, FOMO, and supply goes away at the same time, prices go up by a huge amount. XRP isn't just another speculative coin like other assets. It's an asset that is driven by usefulness and is linked to the future of global payments. Now, here's something that most people miss. A lot of XRP is also being locked away quickly on the Flare network. Flare wants to lock up 5% of all the XRP that is out there. More than 60 million FXRP have already been made. 5 billion XRP were taken out of circulation to help their environment. When you add that to the fact that ETFs are taking in supply, you can see how quickly shortage can set in. That's not all, though. There are now XRP treasury companies that are specifically set up to hold and handle institutions' XRP reserves. This is the building part of a real financial revolution, and XRP is in the middle of it all. Take a step back and think about what that means. The world's biggest banks, like JP Morgan and DBS Bank, are working hard to create tokenization systems for interbank deposits. Also, guess what? Ripple and DBS already work together. That's not just a guess. That's going on right now. That's the beauty of it. When XRP ETFs go live and start to gain popularity, that information will be spread through standard financial channels. Bloomberg, CNBC, and Reuters. All of them will start talking about XRP in the same way they've talked about Bitcoin and Ethereum ETFs. This kind of publicity brings in new investors, not just crypto traders, but also financial planners, family offices, and institutional portfolio managers. These people can finally legally and directly put money into XRP. That's what changes the game, because XRP is now, for the first time, an asset that normal finance can use that is compliant and of institutional grade. Yes, that's what happened with Bitcoin in 2024. It made an asset into an investment that is known all over the world. Now it's time for XRP. Yes, a 3-digit XRP may sound crazy right now, but when you think about everything that's going on, limited supply, huge inflows, institutional access, widespread acceptance of tokenization, and ISO 2022 compliance, it's not only possible, it makes mathematical sense. Remember that JP Morgan thought that $8 billion would come in during the first year, but that was just a guess. Retailers can join, global on-demand liquidity grows, and Flare and treasuries lock up tokens, so the amounts could easily be higher than that. Prices change very quickly when demand is higher than supply. Ripple's partnerships with big banks and payment providers, along with its recent integration into ISO 2022, make it even more exciting. This means that XRP is at the center of the new financial system that is being built right now. Charles Hoskinson himself has said that Cardano and XRP are the best ways to meet ISO 2022 standards and connect traditional banking and DeFi. We've come a long way since a few years ago. That means the stage is set. As more and more ETFs are released, supplies run out, and liquidity tightens. At the same time, the world's largest banks are getting ready to move money into tokenized assets. And it all comes back to XRP, a digital asset that was made to be fast, scalable, and work with other cryptocurrencies. What comes next, though, is even more deep. There is a bigger story going on behind the scenes with Ripple. Its ties to the Federal Reserve and how XRP's liquidity corridors are being used around the world. And when it turns on all the way, price action might be different from anything we've seen in the past of crypto. You should think about how fast this change is happening. About a year ago, XRP was still in the middle of court cases, and most institutions stayed out of them until things got clear. Now that the SEC case is over, ETFs are out, and the floodgates for regulation are open. The same big players that used to avoid XRP are now moving in quickly. It's not an accident. That's a chance for a planning meeting. Behind the scenes, the world's banking system has been getting better for years. The switch can finally be turned on now that the US government is no longer putting pressure on it. XRP is in the middle of that move. A lot of the time, when people talk about ETFs and price movement, they forget why institutions care about XRP in the first place, how well liquidity works. It was never meant for XRP to only be used for speculation. It was made to fix a problem worth trillions of dollars, the waste of moving money around the world. There are still old trains, nostro vostro accounts, and settlement delays that plague traditional cross-border systems. Every day, these problems cost banks billions of dollars in idle capital. All of that goes away with XRP. It lets value change right away and has a neutral bridge asset that doesn't depend on currency and is friendly to regulators. Because of this, banks such as DBS, Santander, and even JP Morgan have started quietly adding Ripple's technology stack to their test programs. That's where ETFs make things worse. Because XRP is kept safe in regulated financial goods, the more it is integrated into the institutional ecosystem. The bank sheets start to show it. It starts to look like collateral. It starts to work like the plumbing in the system. That's when adoption really starts. Take a look at what's going on with Ripple's ODL, on-demand liquidity, channels. No longer are these trials on a small scale. They are live in many countries and settle payments between big banks right now. Month after month, the volume has been slowly going up. As the ETFs make it easier for people to get cash, those corridors will have access to bigger amounts of XRP, which will make them even more useful in the real world. When real-world usefulness is mixed with speculative and institutional demand, you get a bull market that lasts for a long time instead of just going up and down. As the environment gets bigger, it grows bit by bit. That's exactly how XRP could not only go up quickly, but also stay high for a while. The tokenization of savings and assets is something that hasn't been talked about enough. JP Morgan and DBS are already using blockchain technology to build systems that turn interbank deposits into tokens. This is a very important change because it makes programmable money possible, which is the next big thing in banking. For that system to work, XRP is a global link between digital assets and real money. A tokenized dollar, a tokenized euro, or a tokenized commodity can quickly buy or sell something else. To do that, openness really lives up to its name. And XRP is the only cryptocurrency that can do it on a large scale. Now, even central banks are moving toward digital currencies like the CBDCs. Ripple has been in talks and pilot projects with a number of these banks. These projects took a long time to finish and are now ready to be finished. And when those CBDCs need ways to settle transactions across borders, XRP is already set up to do that. This means that while ETFs allow cash to flow in, the banking system also lets XRP's usefulness flow in. At the same time, two waves are coming together, bringing in money from sponsors and cash from people using the technology in the real world. That's what makes motion that can't be stopped. Don't forget about ISO 2022 either. The new age of finance is built on this global messaging standard. It is being used by all big banks, payment networks, and other financial institutions. XRP and a few other assets can be used together without any problems. There's no chance in that. Planned that way. When ISO 2022 goes live on more systems later this year, it will make it possible for regular banks and blockchain networks to talk to each other without any problems. This is what links DeFi and traditional fiat. In this way, organizations can easily add digital assets like XRP to their current systems without breaking any rules. That's what Charles Hoskinson meant when he said that ADA would hold the line with XRP. It means that these networks are made for the new banking message layer. When everything is in sync, it's like the world's payment lines have been opened up to let more money flow through more quickly. XRP is the link that holds it all together. It's very clear what happens next if you really think about it. The ETFs begin to take in stock. As the market rises, retail investors chase it, institutional goods multiply, and demand for utilities keeps growing. The trade float gets squeezed at some point. That doesn't just make prices go up, they set new priorities. The market figures out what XRP is worth again now that things are different. Let's picture a situation. In the first 6 months, ETFs take in a few billion XRP. Flare holds on to a few more billion in FXRP. Treasury companies take out extra money to handle reserves. At the same time, banks are trying XRP transfers in the real world through ODL and RippleNet. Suddenly, there are less than 2 billion XRP left in the world's trade float. Compared to the possible rates, that's a very small amount. At that point, there is supply shock on top of more people knowing about it, clearer rules, and widespread use. That's how levels with more than one number start to show up. Not because of hype, but because of math. David Schwartz may have meant his 74.24 comment as a joke, but it also shows something more serious. Trust from someone who knows how this system is put together. The people in charge of Ripple have always been a few steps ahead of the market. They know that how people feel about something affects the price, and the price affects the infrastructure. When that system is fully up and running, XRP's real value starts to show. And what we're seeing now is all the necessary parts coming together. ETFs, global payment integration, ISO 2022 messaging, tokenized assets, and rising liquidity corridors all help to give institutions legitimacy. Every piece makes things more stable and in demand. Now, take a step back and look at the macro scene. The United States has changed its whole tone. The word from Washington is now clear after years of not knowing what the rules would be. New ideas in crypto are welcome. The new leaders of the SEC and the Treasury have talked freely about how to bring digital assets into the U.S. economy. From where we were just 2 years ago, that's a huge change, and with that change, the biggest economy in the world is essentially giving the go-ahead for the next big step in finance. Banks that were hesitant in the past are now starting to handle digital assets. Blockchain agreements are being tested by big payment companies. Even the Federal Reserve has said that distributed ledger technology can help make things run more smoothly. All of these changes are good for XRP because they don't go against the system. It was made to fit inside it. Ripple made XRP regulatory friendly from the start, which is why it's quickly becoming the most popular bridge asset for safe cross-border payments. As a result, XRP acts as the grease that keeps everything running smoothly in this new financial world. Whether you're giving money back to family or friends, setting up bank transfers, or moving tokenized assets between countries, XRP is the universal layer of liquidity that makes it all work. This is not financial advice, which is why big banks are quietly getting ready to support it. They might not say everything right away, but watch what they do. Partners are being hired, technology tests are being sent out, banks are coming, money is coming, and the infrastructure is ready. We are on the verge of a change in the economy that only happens once every generation. The door was opened by Bitcoin. Ethereum set everything up, but XRP is the one that is going through that door and into the real world of global banking. And when everyone else comes up, the people who knew this early on will already be where the value is going to be in the future. At the moment, places like JP, there are blockchain settlement tools being worked on by Morgan, HSBC, DBS, and even central banks. They know that the old systems like Swift messages, Nostro Vostro accounts, and payments that take more than one day can't keep up with tokenized value movement in real time. They know that their waste costs them too much money. And that's where XRP comes in softly. It's not about guessing or dealing in the short term. It has to do with function. Ripple's network is already linked to more than 300 institutions around the world. Several of these banks are currently growing their test programs. They want payments right away, lower costs, and the ability to move money around the world 24 hours a day, 7 days a week. All of these things that XRP does easily. What's going on below the surface is much more important than what's in the news about Bitcoin ETFs. There is a bridge being built between digital and traditional banking, and XRP is one of the assets that is being used to build it. The plan for JP is already taking shape. Morgan is putting together a network for tokenized payments. DBS is making changes to its digital market. XRP is at the center of Ripple's RippleNet and ODL technologies, which are putting these pieces together. Over time, these separate systems will combine into a single, fast, secure, and global financial web that can work with other systems. Building that kind of infrastructure doesn't just change how banks work, it changes what it means. In a world where XRP is the universal liquidity layer, every payment, settlement, and asset transfer would happen quickly and safely through digital ledgers. We're moving toward that, and it's no longer a someday idea. It's being built now. The United States wants to be the center of digital banking around the world. To do that, it needs to embrace the assets that allow for real-world transfers. That's why big banks are starting to offer crypto storage and build blockchain lines into their settlement systems. They know that they have to get this change. It's a move to stay alive, because time really is money in this new scheme. The institutions that can move money quickly, safely, and around the world will be the ones that matter, and XRP is built around those exact features. So let's talk about the supply balance once more, since that's what makes this whole thing work. When ETFs buy and hold the underlying XRP, when Flare locks up even more billions, and when governments take in more reserves, the amount of liquidity that is available keeps going down. However, demand from both institutions and regular people keeps going up. That's why the math points to a big change in value. The numbers quickly start to make sense, even if you don't make any crazy predictions. When huge amounts of new money come in at once, it creates upward pressure that can turn an asset that was once thought to be worthless into a financial powerhouse. Also, keep in mind that XRP doesn't have to take over the whole financial system to hit valuations that will change your life. If it gets even a small share of global capital flows, cross-border payments, or tokenized assets, its market caps will go through the roof. It's not just a term when you hear about tokenization, it's the future of money. Trillions of dollars worth of stocks, bonds, real estate, and commodities from the real world are being put on the chain. These tokenized assets will need a fast, flexible, and neutral bridge asset every time they need to move value or settle across networks. That's pretty much what XRP was made for. It's not just payment rails that Ripple is building when they talk about relationships with banks, central banks, and payment providers. They're building the new backbone of the world's financial system. This is why the acceptance of the ETF is so important. It's the start of XRP's change from a crypto token that people didn't understand to an asset that banks and other institutions know. When regular people like investors, financial advisors, and funds are allowed to properly buy it through ETFs, a lot of people will do so. These moves don't just raise the price, they also make XRP accepted around the world. It will show up in financial news, analyst reports, and finally in how banks talk about managing their cash flow. XRP will go from being a unique way to spend to being an important type of asset. Now think about this. The first people to use a new business idea always make the most money. The ones who knew what would happen before it did. XRP is following the same road as early internet stocks. First made fun of, then quietly accepted, and all of a sudden couldn't be avoided. We're in the middle stage right now. Adoption and peace. The news hasn't caught up yet, but the machinery is being put together. The ETFs are about to go live. The banks are coming together. The paths for liquidity are opening up. And by the time the finally figures out what's going on, the window of opportunity for huge gains will have already closed. That's why time is important. The real value of XRP starts to show up when Ripple's ODL traffic starts to rise through these corridors. XRP is needed for those deals. They have to be done. This pool of XRP is used for all transfers, settlements, and money transfers. When you spread that out over hundreds of routes around the world, you can see how quickly demand can grow. This is what makes price increase last for a long time. There should be organized demand meeting limited supply, not hype or emotion. That's how things go from being undervalued to being legendary. The best part comes next. It's not just happening in one area, worldwide. North America, Europe, Asia, and the Middle East. All of them are moving. The Monetary Authority of Singapore, the Bank of England, and a number of institutions in the Middle East are all working on blockchain-based payment networks that work just fine with Ripple's technology. Africa is even building digital payment routes that are run by partners of Ripple. XRP is at the center of the global web of wealth that is coming together. When people ask, when will XRP move? It's easy to say. It's going already. Things are getting ready to start. The building blocks are here. Now the ETFs can be used. The way money works is changing. It will only be a matter of time before that movement shows up on the charts in a way that turns heads around the world. Don't get the wrong idea. The story will change overnight once XRP starts showing steady, large-scale gains. The news sites that ignored or criticized it before will now cover it every day. The buyers who turned it down before will now be after it. After that, the next step starts. Mainstream fear of missing out, FOMO. But by then, smart money will have already placed its bets. People who first believed, the holders who knew, these were the people who knew it wasn't just about price. It was about getting ahead of a generational rethink on money. Don't lose focus, learn as much as you can, and be ready. Since the next phase of XRP is no longer about promise, execution, connection, and getting value are all important.